Imagine Canada standing on a bridge. On one side is the familiar shore of post-pandemic recovery, a place where jobs were returning and life felt like it was getting back to normal. On the other side, shrouded in mist, lies an unknown economic future. For months, we've been walking across this bridge, feeling the solid ground of progress beneath our feet. But as of today, June 20th, 2025, the bridge has started to shake. The mist on the other side is beginning to look less like a land of opportunity and more like a valley of economic hardship, marked by rising unemployment and growing uncertainty. We are at a crossroads, a moment where our next steps will determine whether we reach a shore of renewed prosperity or stumble into a new crisis. The optimism that carried us through the last few years is now being tested. The sense of collective relief that came after the worst of the COVID-19 pandemic has given way to a quiet anxiety. Families who were just starting to rebuild their savings are now watching the news with a growing sense of dread. Business owners who survived lockdowns are now facing a different kind of threat, one that comes not from a virus but from trade disputes and international politics. This isn't just about numbers on a spreadsheet. It's about the very real possibility of progress being undone, of hard-won gains slipping through our fingers. The air is thick with questions and the answers are far from clear. Two possible futures are emerging from the fog. In one, our leaders navigate these turbulent waters with skill and foresight. A path is cleared, trade tensions ease, and the bridge leads us to stable ground where businesses can hire again and families can plan for the future with confidence. This is the future of resilience, where we prove that our economy is strong enough to withstand shocks and adapt. It's a future built on smart diplomacy, strategic investment, and a shared commitment to protecting Canadian jobs and industries. This optimistic scenario is still within our grasp, but it requires decisive and immediate action. The alternative is a much darker picture. In this version of the future, the trade disputes with our largest partner, the United States, escalate. The tremors on the bridge grow stronger until they become a full-blown earthquake. Layoffs spread, businesses shutter, and the economic recovery we worked so hard for is derailed. This is a future of setbacks, where rising prices and shrinking paychecks put a squeeze on households across the country. It's a future where the dream of a stable, prosperous Canada feels more distant than ever. The choice between these two paths is not inevitable. It will be forged by the decisions we make right now, in the coming days and weeks. The numbers tell a story, and right now, it's a troubling one. As of May 2025, Canada's national unemployment rate has climbed to 7%. To put that in perspective, this is the highest it has been since before the pandemic began, erasing years of slow but steady job growth. While this figure is still far from the staggering 14.2% we saw at the peak of the COVID-19 crisis in spring 2020, it's a significant and unwelcome departure from the 5 to 6% range that had become our new normal. We are moving in the wrong direction, and the trend is picking up speed, leaving a trail of worry from coast to coast. The pain is not being felt equally across the country. Some provinces are bearing a much heavier burden than others. In Ontario, our manufacturing heartland, the unemployment rate has hit a worrying 7.9%. A direct consequence of the trade-sensitive auto and steel sectors taking heavy blows. Alberta is also struggling, with a rate of 7.4% as economic uncertainty ripples through its industries. The situation is even more dire in the Atlantic provinces, where Newfoundland and Labrador is grappling with a 9.7% unemployment rate. In contrast, provinces like Saskatchewan at 4.2% and Quebec at 5.8% have shown more resilience, but no region is entirely immune to the chill spreading through the national economy. When we compare today's situation to just a few years ago, the contrast is stark. Before the pandemic, a 7% unemployment rate would have been seen as a sign of significant economic distress. We had grown accustomed to a more stable job market, where opportunities were plentiful and workers had more leverage. The pandemic shattered that stability, but we fought our way back. Now, just as we thought we had regained our footing, this new crisis threatens to pull the rug out from under us once again. It's a frustrating setback that feels different from the pandemic, more man-made, and perhaps more avoidable. The story behind these numbers is one of real people and real families. It's the story of a factory worker in Hamilton who just received a layoff notice, a small business owner in Calgary who can't afford to keep all her staff, and a recent graduate in Halifax struggling to find their first job. Each percentage point represents tens of thousands of Canadians facing financial and emotional strain. The stability that a steady paycheck provides is the bedrock of our communities, and as that bedrock begins to crack, the tremors are felt in every corner of our society, from the grocery store checkout to the family dinner table. So what is causing this sudden and sharp rise in unemployment? The answer isn't complex or mysterious. The primary driver of this economic downturn can be traced directly to one major issue: a trade war with the United States. In recent months, the U.S. has imposed heavy tariffs, ranging from 25% to 50% on key Canadian exports, including steel, aluminum, and automobiles. These are not just random products, they are the backbone of our export economy and the lifeblood of hundreds of Canadian communities. When our biggest trading partner suddenly puts up a wall, the impact is immediate and severe. These tariffs act like a massive tax on Canadian goods, making them much more expensive for American buyers. As a result, demand for our products has plummeted. In April 2025 alone, our exports to the U.S. dropped by a staggering 15%, a decline that has sent shockwaves through our industrial sector. Canadian companies that have spent decades building relationships with American clients are now finding their orders canceled and their contracts terminated. They are faced with a simple, brutal choice: either absorb the massive cost of the tariffs, which is impossible for most, or cut back on production. Inevitably, they have been forced to choose the latter. This reduction in output leads directly to job losses. When a steel mill can't sell its product, it doesn't need as many workers to run the furnaces. When an auto parts manufacturer sees its orders from U.S. car makers dry up, it has no choice but to slow down the assembly line and send workers home. The Bank of Canada has been clear in its analysis, stating that the tariffs have lowered our exports and weighed on employment. This isn't a theoretical economic model. It's a real-world chain reaction where a political decision in Washington leads to a pink slip in Windsor or Sault Ste. Marie. It's crucial to understand that this is not a crisis of our own making. Canadian businesses are competitive, our workers are skilled, and our products are high quality. The problem lies entirely in the realm of international trade policy. The tariffs were imposed as part of a broader protectionist strategy by the U.S., and Canada has been caught in the crossfire. While our government has responded with counter-tariffs and policies to support domestic industries, these measures can only do so much to shield us from the storm. The fundamental issue remains. Our access to our most important market has been severely restricted, and Canadian workers are paying the price. The job losses may start in the big factories and industrial plants, but they don't end there. Think of it like a stone thrown into a pond. The initial splash is the layoff announcement from a major company, but the ripples spread outward, touching every part of the local economy. When a large employer like ArcelorMittal closes its Hamilton mill, laying off over 150 workers, or when General Motors and Ford slow down production in their Ontario plants, the impact is felt far beyond the factory gates. These are not isolated events. They are economic shocks that reverberate through entire communities. Consider the small businesses that depend on these large industries. The local diner that serves lunch to hundreds of factory workers suddenly sees its customer base disappear. The trucking company that transports raw materials and finished goods finds its contracts drying up. The cleaning services, the office supply stores, the uniform suppliers. All of these smaller enterprises suffer when their biggest clients cut back. In March 2025, Canada lost a net total of 32,000 jobs, and many of these were not in manufacturing itself, but in the wholesale, retail, and business service sectors that support it. The ripple effect is powerful and relentless. This economic pain eventually finds its way to Main Street and into our homes. When people lose their jobs or fear losing them, they stop spending money on non-essentials. The family that was planning to buy a new car puts it on hold. The couple that was saving for a home renovation decides to wait. People eat out less, cancel subscriptions, and delay vacations. This widespread caution hurts retailers, restaurants, and service providers, leading to even more job losses in sectors that seemed far removed from the initial trade dispute. It's a vicious cycle where fear and uncertainty feed on themselves, dragging the entire economy down. Furthermore, the tariffs don't just destroy jobs, they also drive up prices for everyone. The cost of steel and aluminum is a key component in everything from cars and appliances to new homes and infrastructure projects. When tariffs make these materials more expensive, businesses have no choice but to pass those costs on to consumers. The Bank of Canada has warned that this could raise core inflation by as much as 75% over the next 18 months. So not only are more people out of work, but the cost of living for everyone is going up. This double blow of rising unemployment and higher prices is a recipe for widespread economic hardship. Canada is now facing two starkly different futures, and the path we take will be determined in the coming weeks. The best-case scenario hinges on a swift and successful diplomatic resolution. If our leaders can negotiate a trade pact with the United States to remove these crippling tariffs within the next 30 days, we could see a rapid turnaround. With the barriers to trade lifted, Canadian exports would quickly rebound. The steel mills and auto plants would ramp up production, and many of the laid-off workers could be recalled. Business confidence would be restored, and the economic engine would start humming again. In this optimistic future, the current spike in unemployment would be remembered as a brief but painful blip, a near miss that reminded us of our vulnerability but ultimately made us stronger. Families could breathe a sigh of relief, businesses could start hiring again, and the fear of a recession would fade. Prices for goods would stabilize as the inflationary pressure from tariffs disappears. This outcome is entirely possible, but it requires our government to act with urgency and skill, leveraging every diplomatic tool at its disposal to secure a deal that protects Canadian interests and restores fair and open trade. However, if the trade war drags on, the consequences could be severe. In this worst-case scenario, the job losses we've seen so far would be just the beginning. More factories would be forced to close, some permanently. The supply chains that connect our two countries would be further disrupted, causing chaos for small and medium-sized businesses that might not survive a prolonged downturn. The unemployment rate could continue to climb, pushing us closer to a full-blown recession by the end of the year. The economic damage would be deep and long-lasting, eroding our industrial base and costing us a generation of skilled workers. This darker path would have a profound impact on the daily lives of Canadians. The cost of everything from groceries to a new roof would continue to rise, putting immense pressure on household budgets. The dream of homeownership would slip further out of reach for many. The Bank of Canada might be forced to cut interest rates, but this tool would have limited effect if the core problem of trade uncertainty persists. Our relationship with the United States, our closest ally and partner, would become even more strained, with long-term consequences for our security and prosperity. This is the future we must fight to avoid. We are not powerless in the face of this challenge. The future is not yet written, and the path we take is still a matter of choice. The solutions to this crisis are clear, and they require a multi-pronged approach that combines diplomacy, economic support, and a bold vision for the future. First and foremost, we must pursue a diplomatic resolution with relentless determination. Our leaders need to be at the negotiating table, working day and night to secure a trade deal that ends this destructive tariff war. This is the most urgent priority, as it addresses the root cause of the problem. At the same time, we must provide immediate support to the workers, families, and industries that have been hit the hardest. This means expanding programs like work sharing and employment insurance to help people stay afloat while they are out of work. It means providing targeted aid to the steel, aluminum, and auto sectors to help them weather the storm without having to resort to mass layoffs. We need to build a bridge of support for those who are most vulnerable, ensuring that no one is left behind as we navigate this crisis. This is a moment for solidarity, not division. Looking beyond the immediate crisis, we must also use this as an opportunity to build a more resilient and diversified economy. For too long, we have been overly reliant on a single trading partner. Now is the time to aggressively pursue new markets in Asia, Europe, and beyond. We need to invest in the industries of the future, like clean technology and advanced manufacturing, to create new sources of job growth. And we must finally break down the trade barriers that exist within our own country, creating a stronger and more integrated national economy. This is not just about recovery, it's about renewal. The next month will be a defining moment for Canada. The decisions made in Ottawa and Washington will shape our economic landscape for years to come. We stand on that bridge, peering into the misty future, with the choice of which way to turn. Will we succumb to the forces of protectionism and retreat, or will we rise to the occasion with courage, creativity, and a renewed sense of common purpose? The answer depends on all of us, our leaders, our businesses, and our communities. Now is the time to act, to fight for our jobs, and to build a stronger, more prosperous Canada on the other side of this challenge.